makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and happy Monday. Welcome to The Pulse. I'm Danny Berger in London, in for Francine this week. Here's what's coming up on today's program. Israel is said to hold off a Gaza ground strike offensive as Palestinian aid and diplomatic efforts to release hostages accelerate. Treasuries and gold fall along with crude as oils dial back hedges against an escalation in the Middle East. Plus, the yen briefly crosses 150 as divisions within the BOJ grow. Plus, shares fall in the public arm of a key Apple supplier, Foxconn, after Beijing launches investigation into its Chinese operations. It's another weak day for risk. Let's take a look at your European markets map because we are selling off. We were briefly higher at the start of the trading day, but we are now down for a consecutive third day. We were down for more than 1% in a row. We're trading at the lowest since January for European stocks. Last week was the worst week since March. It is clear the stress is in. DAX down 0.5%. FTSE 100 doing poorly as some of those commodities sell off too. Now, on the point of commodities, I want to take a look into oil because this is really a strong indication of how traders are trying to grasp, trying to handle the uncertainty of what happens over the weekend in the Middle East. For the second Friday in a row, we've had this huge breadth of call options for crude. In other words, traders are trying to hedge that there's an escalation in the weekend and that something happens that means oil spikes higher. Now, that's not what we're seeing today. Instead, we're looking at WTI fall back around $87 a barrel. You do have this hold off. We're going to talk to our reporters about this in just a moment of what's happening in Israel, a hold off of a ground invasion as more negotiations happen around hostages. All right, the other big market mover has been treasuries. Now, whether treasuries work for a haven, that is not so clear. What is clear is that the trade that is in is a steepening move. On 530s, we are now positive, just barely 2.3%. We've tried to go positive. We've tried to test this level for now 5 times so far this year. We haven't closed in positive territory since August of 2022. Now, this precedes a 2s10s inversion, which historically also precedes a recession. But is this time different with the long end moving on supply and strength in the economy? Last market mover to show you is the yen. I have dollar yen here. In the early hours of this morning, we yet again crossed 150 per dollar. A lot of options build up around this level. That makes it hard to sustain above 150. We do have a BOJ meeting next week. The Nikkei reporting that officials are talking about a YCC tweak ahead of it. It's unlikely we're going to see intervention because MOF has been very clear. They care more about the speed than necessary a round number of 150. Okay, let's turn back to those developments in the Middle East because the timing of a ground invasion into Gaza remains uncertain. Israel's support for diplomacy to release hostages is said to possibly delay or alter its plans. Let's get to Oliver Crook, who is in Tel Aviv. Oliver, what is the latest on aid, the hostages, and the possibility of a delayed ground invasion?
Right, Danny. And as you say, all of these things are basically fundamentally connected. And the big developments over the weekend were the precedent that was set of 1, aid entering into Gaza, but 2, hostages being released. On the question of aid, the first development was 20 trucks on the first day that went through, which, again, according to all the UN and all the other humanitarian organizations, is really a fraction of what is required to make a meaningful difference for the very, very challenging humanitarian situation in Gaza right now, where, according to the authorities there, more than 4,500 people are now dead since the beginning of this. Really, the UN is asking for something closer to 100 trucks a day. On the hostage front, again, you had 2 hostages, Americans. It was brokered by Qatar, we understand. Hamas released them on, quote-unquote, humanitarian grounds. This is not exactly clear what that means and also why they were selected. But again, from the U.S. and from the Israeli standpoint, though this is a positive development, there's going to be more desired for that. And how all of this bears on the ground invasion or the incursion, which, again, the IDF has wanted to keep a lot of latitude in terms of what that will actually look like, is still an open question. But we are now entering the 3rd week. The ground incursion has not begun. And in terms of the theater of war over the weekend, it has still been principally focused in Gaza, where airstrikes have continued to pummel the ground. However, we are seeing more and more activity in the north on the border with Lebanon, from which the Israelis have evacuated a number of civilians, more than 60,000, and 14 additional communities yesterday and today. So again, that is going to be one of the flashpoints to watch.
Oliver, what else are we watching in terms of significant events on the diplomatic front?
So there are the things we can predict and the things we can't predict. The one that we cannot exactly predict, but the one that everyone is watching, is the escalation threat, right? The United States, Anthony Blinken over the weekend saying that there is a fear and that there's an expectation there's going to be more attacks on U.S. installations. They're deploying more air defense forces to the Middle East. They're adding more soldiers apparently on high alert. The things we can predict, for example, in 30 minutes time, and I think this is worth noting, is the IDF is going to show a screening of footage taken from Hamas attackers in the south of Israel, 40 minutes worth of it, to journalists, and then it will release some portion of that into the public. This is significant for the question of temperature, rage, and anger, which is a huge part of this conversation on both the Israeli side and the Palestinian side and the rest of the Arab world. There is also the question of diplomacy. Mark Rutte, the Prime Minister of the Netherlands, will be in Israel today. He will meet with Netanyahu. He will meet with Mahmoud Abbas as well. And then we have Macron coming on Tuesday. And the final note, Danny, which has kind of been far from the front of mind for many people, is the economic toll of the war. We're going to be hearing from the Israeli Central Bank later today at 4 p.m. local time, going to get a rate decision. There will also be a press conference and also maybe an idea of what this looks like in terms of the economic toll now entering the third week of war.
Yeah, and just on that, the shekel set for the longest losing run since 1984. Oliver, thanks for keeping us up to date on all of that. That's Oliver Crook live in Tel Aviv. Now, amid all this, Israel has warned that Hezbollah risks dragging Lebanon into the war, saying it responded after anti-tank missiles were fired from its northern neighbor. Now, at the same time, U.S. Secretary of State Anthony Blinken says there is a threat of Iran flaming the situation.
We expect that there's a likelihood of escalation by Iranian proxies directed against our forces, directed against our personnel. We are taking steps to make sure that we can effectively defend our people and respond decisively if we need to. This is not what we want, not what we're looking for. We don't want escalation.
Joining us now is Bloomberg's EMEA News Director, Roz Matheson. Roz, what is there to know right now at this moment about Israel's warning on Hezbollah?
Well, what we've seen is, even as they're increasing their airstrikes into Gaza, and Oliver was pointing out that's picking up, we're also seeing an intensity in the north of Israel into the south of Lebanon. So we're seeing more skirmishes, we're seeing trading of fire, drones and so on. And Israel warning, like Hezbollah, which is really occupying that area of Lebanon. And of course, Hezbollah is backed by Iran, and saying back off here, because what they're really fearing is you end up with two fronts in a war. You have Hamas, you have Gaza, but also you end up pulling in Hezbollah. And we're seeing that those attacks are going further and further into the south of Lebanon, so further and further into that country. And that really is raising the possibility that Hezbollah gets properly pulled into a conflict with Israel.
And what are the significances of that, of having a northern front opened in this conflict?
Well, Hamas is one thing, but Hezbollah is actually another kettle of fish entirely. They're bigger, they're far more sophisticated, they've got many, many more weapons. I mean, they've got very, much better missiles for a start that could really challenge Israel and its Iron Dome air shield defence over major capitals and so on. And so Hezbollah is possibly a much more sophisticated challenge for Israel militarily, and being backed very heavily by Iran. Again, the concern is you end up in a direct conflict between Israel and Iran, which no one in the region really wants to see.
Right. It is that escalation risk that many, if not everyone, is concerned about. Roz, thank you very much. That's Bloomberg's EMEA News Director, Roz Matheson. Now, Haven assets are in retreat this morning after, as we've been talking about, sources said that Israel is said to be delaying its ground invasion of Gaza to allow more time for hostage negotiations. Joining us for more on the market moves is Bloomberg's Paul Dobson in Singapore. Paul, you have seen this clear come down in oil and in gold. How much of this is relief versus just a pause in volatility that is very likely to continue?
Yeah, good morning, Danny. So I think, it's a similar pattern to what we saw last Monday as well. On Friday afternoon in the U.S. session, everyone kind of holds their breath. They pick up the hedges in the crude oil, in the gold. Even in U.S. Treasuries, they lighten up on stocks in case, there's a big escalation or some change in the narrative over the weekend. Come back in on Monday and things looking more or less the same from the big picture perspective, with the provisos that Ross was talking about just then. Then the market lightens up again. But there's definitely a significant risk premium and fear factor priced into markets now over the tension in this situation and that risk of escalation that Ros was describing, the worst case scenario is still something that is very much at the forefront of traders' minds right now.
It's also probably worth mentioning copper, LME copper, is now trading at the lowest level since this past November. So maybe some growth worries also bringing in oil prices. But elsewhere, Paul, we also saw the yen go above 150. It falls back below it. Can we expect a BOJ intervention, or should we say, 150, a nice round number, but it actually doesn't mean too much?
Yeah, well, I think it feels a little bit like the algos in the market, the algorithmic trading programs are there looking to sort of get in before there might be any intervention from the Japanese authorities. Remember, the government, rather than the BOJ, is the one that gives that signal for the intervention and makes it all happen. They have been making noises that they're discontent with the moves. They talk about the pace of the move rather than the outright levels. And if you look at the chart, you can see it's been a very steady and gradual move right now. We did pop above 150, signaling further yen weakness right at the start of the session today, and rebounded from there. The way that the market is trading, it looks like it wants to carry on testing that level, at least for the moment. So far, the actual signs of action or intervention from the authorities have been pretty limited. So, still that kind of tug of war, that little bit of a poker game between the market forces and what the authorities might want to see.
Yeah, lots of testing ahead of next week's meeting. Paul, thank you so much for all of that. That is Bloomberg's Paul Dobson. Now, coming up, we're going to dive deeper into the market story, including the prospect of whether or not the U.S. can manage a soft landing for its economy, a question we've been asking, feels like decades at this point. All of that next. This is Bloomberg.
Regardless of the decision made at our next meeting, if the economy evolves as anticipated, in my view, we're likely near or at a holding point on the Fed funds rate as we accumulate more information on economic and financial developments and assess the effects of the tightening in financial conditions that's already occurred.
Cleveland Fed President Loretta Mester giving her view on rates as we head into the blackout week for the Fed before their next rate decision. Joining us now is Madison Faller, global investment strategist at JPMorgan at Private Bank. Madison, great to see you.
Nice to see you.
Look, it's been a ride, as it has been for a few years when it comes to yields. Bonds are supposed to be the haven class. They're supposed to be the thing we can flock to when we see crises like we've seen over the past 2 weeks. But that's not what we're seeing. Yields are charting higher again this morning. Where do they belong in a portfolio, especially when you're thinking about havens?
Sure, thank you. I mean, I think bottom line is we still do like bonds, especially as part of a multi-asset class, diversified, goal-aligned portfolio. But I do think it's important to acknowledge that the ride, higher in yields has been a really painful one for investors. Last year, it had to do with central banks recalibrating and hiking really aggressively to combat inflation. Today, we're in a different place where inflation's, much more under control. But you are seeing, I think, bond yields rise for a variety of reasons. We would put some of that in the fundamentals camp with better growth, shift towards a higher for longer stance from central banks. But then you also have, I think, this aggregate of higher uncertainty and higher term premium as well, which can be harder to gauge from an investor perspective. So you're looking at Washington dysfunction, higher fiscal deficits, technical factors really moving markets as well. I think, with the levels that we're looking at now, that's not to say we couldn't see further spikes, but I do think we are starting to look quite stretched. And so when we think about the long-term perspective for bonds, it does seem that now you are, I think able to achieve much better diversification, lock in higher yields for longer. And I think that still matters for investors.
It's interesting because of the factors you were describing of why yields have been charting higher. We've seen bear steepening instead of bull steepening. That's pretty classic of what we usually get coming out of a cycle where we look at 530s this morning. They're positive, have yet to close there. But do you look at that and say, OK, history is going to hold up this time? And when we get that disinversion, a recession follows? Or do you say because of the unique factors you were just describing, this time is different?
So, yes, there are unique factors at play with that higher uncertainty premium that's attached to the rise. But I think at the same time, we know that the yield curve is an imperfect predictor of recessions. And while it can predict recessions, the timing of that is very difficult to get right. And so I think when we look at what we're seeing from the economy today, we still do think that prospects are higher for a soft landing rather than not. That's not to say there aren't risks. And I think it's also important to talk about what a soft landing means and really define that. It doesn't mean a reacceleration in growth and that everything's rosy and everything's fine. We still do expect cooler growth and, moderating consumer, a slightly loosening labor market. But I do think that's very different than calling for an all-out stop in economic activity.
So I know you think equities have opportunity from here. Where is the opportunity, especially as we head into an earnings season, especially as we head into tech earnings? Where do you look to?
Sure. And so I think with that, you highlighted a really good point. When we think about future stock upside from here, we are very much focused on that earnings picture. So it's not necessarily from a dramatic re-rating in valuations, but instead from that underlying growth that we're now seeing from companies. On a sector basis, we still do think that there's opportunity in technology companies, but I think it's important to focus on reasonably priced technology. So you want to make sure that you're getting adequately compensated, for that future earnings. Secondly, industrials, which continue to be backed by a really strong fiscal impetus, both in the U.S. and in the euro area. And then we'd also point out, I think, healthcare as a way of, I think, adhering to more defensive growth within portfolios as well.
So if we're in this world where you see equities offering opportunity, it's Monday, I'll find my words at some point, Madison, and also bonds being attractive with the yield you can get from them now. Can I go back to the traditional investing strategies? Can I go back to 60-40? Is that what's coming in 2024?
So I think the 60-40 offers a really great starting point for investors, and that remains true. And you can certainly achieve, I think, a higher return in a 60-40 today relative to where you could, call it 5-6 years ago. But that said, I think we are in a new regime now where you're looking at potentially higher growth, higher inflation, remaining at least sticky relative to the last cycle. And that probably means that you need to bolster that 60-40 with alternatives like real assets, like direct lending, that I think can offer some of that protection in the event that you see this higher inflationary environment.
Is there not a degree, though, which a lot of those assets are just risk, especially with something like private equity? I mean, is that not just one of the criticisms of it? It's just leveraged equities. That's all it's offering you.
But I think that's also evident in the return premium that's offered by those asset classes as well. And so when we put together our long-term capital market assumptions that look to forecast what different asset classes could produce over the next 10 to 15 years, yes, to an extent, you are taking private risk, but it is offering you a premium in order to do that above public markets.
Right. Okay, Madison, afraid we're going to have to end it there. Thank you so much for joining on this Monday. That is Madison Faller, Global Investment Strategist at JPMorgan Private Bank. Now, coming up, Argentina's electoral excitement. We're going to get the latest from Buenos Aires. This is Bloomberg.
Markets in Argentina on Monday will wake up to one of investors' most feared scenarios from the country's presidential election on Sunday. Economy Minister Sergio Massa is heading to a runoff vote on November 19th versus outsider candidate Javier Milei. Massa pulled off a major comeback Sunday by winning the general election with 36% of votes, while Milei actually lost some momentum, receiving 30% of votes. The pro-market candidate, Patricia Bullrich, was eliminated from the race after only securing 24% of ballots. Now Argentina will choose between Massa, who oversaw Argentina's economic crisis marked by strict currency controls and capital restrictions, versus Milei, who wants to change Argentina's currency from the peso to the U.S. dollar. That's a proposal that many economists say would create hyperinflation. Whether Massa or Milei, Argentina's next president will inherit titanic challenges. The country is heading into its sixth recession in 10 years. Inflation has pushed 40% of the population into poverty. And still, Argentina owes $44 billion to the International Monetary Fund, and its current agreement may need to be renegotiated yet again. Looking forward, a big question is the city of Buenos Aires. Patricia Bullrich won 40% of the votes in the Capitol, so where her voters go during the November 19th runoff could decide who is Argentina's next president. Reporting in Buenos Aires, Patrick Gillespie, Bloomberg News.
The latest there on the Argentinian election, again from our reporter Patrick Gillespie. All right, a quick check on Apple in the pre-market. We've seen its assembler, Hon Hai. This is, of course, the parent of Foxconn. That fell 2.9% after Chinese authorities reportedly launched probes into Foxconn. This is according to the Global Times. Units there are going to be undergoing tax audits, and the Apple supplier's land use in some regions will also be reviewed. Now, it's important not to underdo how big Hon Hai is to Apple. It is its biggest supplier, 55% of revenue coming from Hon Hai. You can see that by going to SPLC Go on your terminal. Coming up, we enter the third week of the Israel-Hamas conflict. We'll discuss diplomatic efforts next. This is Bloomberg. Israel is said to hold off a Gaza ground invasion as Palestinian aid and diplomatic efforts to release hostages accelerate. Treasuries and gold fall along with crude oil as investors dial back hedges against an escalation in the Middle East. Plus, the yen briefly crosses 150 as divisions within the BOJ grow. Plus, shares fall in the public arm of key Apple supplier Foxconn after Beijing launches investigations into its Chinese operations. Happy Monday and a good morning to you. Welcome to The Pulse. I'm Danny Berger in London. Now, the timing of a ground invasion into Gaza remains uncertain. Israel's support for diplomacy to release hostages is said to possibly delay or alter its plans. Now, meanwhile, French President Emmanuel Macron and Dutch Prime Minister Mark Rutte will arrive in Israel in the next 2 days as a diplomatic effort to prevent the conflict from spreading continues. Let's now get over to Bloomberg's Oliver Crook, who is in Tel Aviv. Oliver, what is the latest on aid, the hostages, and the possibility of a delayed ground invasion?
So there were significant developments over the weekend, both on precedent on aid in the sense that there was the first aid that crossed in, but precedent also with hostage release. And the hope is that that will accelerate more aid and more hostages. What we can say about aid is the first deployment was 20 trucks that crossed over the border with Gaza. Every sort of aid organization in the UN say that that is really a fractional amount of not only what is needed, but also what was going into Gaza. Previously, the UN would like to see something closer to 100 trucks a day. We know that Biden and Benjamin Netanyahu have discussed a continuous arrangement in which that could keep going. We've had at least 2 deliveries, and we're expecting more today. On hostages, as you mentioned, 2 released. It was brokered, we understand, by Qatar. Hamas let them go on quote-unquote humanitarian grounds, which we don't really entirely understand what that means and also why those were the ones selected. And all of this, of course, Danny, bears on this notion of the ground operation, but it's also tied to other things. And the question is, they've continued the aerial assault. The theater of war is still primarily in Gaza, but we're seeing more and more activity on the southern border of Lebanon, where there's going to be more. There's been more and more skirmishes, and we've had tens of thousands of people that have been evacuated from the Lebanese border, from the Israeli side. And in fact, I've been living in this hotel for 2 weeks. The first part of the time I was there, I was meeting a lot of people that were evacuated from the south. Now we understand that a lot of the people that are there are the ones who have been evacuated from the north.
And Oliver, as I mentioned, we're going to see both the French and the Dutch leaders come to Israel. What are we expecting on the diplomatic front?
So those are, so as you say, Mark Rutte will be here later today. Then Macron will be here tomorrow. We understand also the Greek Prime Minister will also be here. And we expect some of the same rhetoric that we've heard from many of the Western allies of Israel, which is also unflinching support, but at the same time, the how they go about this operation in Gaza is going to be critically important. Another thing that we should mention, Danny, is that actually right now, as we speak, there is going to be more footage that is being currently screened to journalists by the IDF, 40 minutes of of tape that came from the Hamas attackers that are being shown to journalists right now and will be eventually distributed, some portion of that out to the public, which is important because of the temperature and the tension and the rage that still exists over the attacks from about 2 weeks ago, which bears, of course, on the Israeli response. And we should also say that there is the rate decision of Israel a little bit later today, which will be watched closely. The economic side of this has not been sort of the primary focus, but we'll be hearing from the central bank about what the long-term economic consequences of this war will be, at least on the Israeli side. And there'll also be a press conference with some questions that will be taken there.
Right. Oliver, thank you very much. That is Bloomberg's Oliver Crook in Tel Aviv. All right, let's get you some other top stories on the Bloomberg terminal this morning. Greece's credit rating has been raised to investment grade by S&P. It's the first such move by one of the big three assessors since the country was shaken by a debt crisis more than a decade ago. Friday's decision puts Greece at BBB- with a stable outlook. The move also comes after the re-election of reformist Prime Minister Kyriakos Mitsotakis back in June. Now, in the U.S., House Republicans have set up a 9-man contest for the Speaker's post. It includes Representative Tom Emmer, an ally of ousted former Speaker Kevin McCarthy. Lawmakers are expected to start the election process tomorrow after McCarthy's removal earlier this month hamstrung Congress and halted fiscal priorities. The U.S. faces another funding deadline next month. Switzerland's right-wing People's Party has scored one of its biggest national election results. The SVP won almost 29% of the vote, allowing greater representation in the lower house. Key SVP pledges include limiting the domestic population to 10 million, reaffirming Swiss neutrality, and cracking down on legal migration. Now, elsewhere, the yen has briefly reached and breached 150 against the dollar. It's triggering speculation that the Bank of Japan could intervene to support the year's worst performing currency. Of course, it's now moved back below that level. Bloomberg's Ven Ram joins us more on this. Ven, is this just a factor of higher yields in the U.S. bullying higher yields in Japan? What is driving right now this continued test of 150?
Morning, Danny. What we are seeing with what happening with the yen is very much symptomatic of the bigger problem, which is that, as you mentioned, the real rate differentials and the nominal rate differentials. If you look at 10-year JGBs, you're getting less than 1%. And on the other hand, you're getting like 5% on treasuries. So that, and, from the looks of it, it doesn't look like 10-year treasuries are going to, consolidate their sell-off. I think that there is more to come. As long as real risk premiums stay intact, I do think that 10-year Treasury yields may head slightly higher from here. And what that means, of course, is that the differential is going to widen, and that is going to weaken the yen even more. That, of course, the Ministry of Finance doesn't like a weaker yen, but the Bank of Japan is nonplussed by it. So I think this is going to be a very interesting to see how this is going to play out in the coming months.
And on that, there was this Nikkei report that BOJ officials are pondering the question of whether to tweak YCC. It's not too long until we get a BOJ meeting. What are we expecting at this point, then?
They probably won't. They will probably decide to stay with rates as they are now at this month's meeting. I do think that, in December, the lay of the land may look rather different. I think the BOJ may tweak their curve control yet again. Remember that they did a similar thing in December last year. So that's when they seem to be wanting to catch the markets unaware, because December is typically a time when portfolio managers are winding down their positions and things like that. So I think that's probably the time frame we are looking at. But, for the yen to recover from here, we need more than just piecemeal measures. What the BOJ needs to do is that they need to get rid of the curve control and also end the negative rate policy. As long as they don't do that, the yen will be on the back foot.
When it comes to the dollar, though, Ven, it has been gaining, but when you look at the run-up in yields, you maybe think there would be more strength. Is there some degree of exhaustion in bullish greenback?
Absolutely. I think that the greenback's resilience is kind of unprecedented. It's so late in the cycle. A part of that stems from the surging real risk premiums, which have buoyed 10-year Treasury yields. And as long as that happens, as long as the US economy doesn't roll over, and there are no signs yet that it is going to be the case, I think that the dollar will find itself bid, albeit it's a very late cycle bid. Therefore, I will expect that correction to happen once the US economy rolls over, but it doesn't look like that point is now.
Ven, thank you very much for joining this morning. That is Bloomberg's Ven Ran. Now, coming up, China rattles foreign companies with a series of arrests and an investigation into Foxconn, Apple's most important partner. We'll bring you that story next on Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Danny Berger in London. Philips has raised its full-year outlook after supply chain constraints eased, giving the Dutch company some breathing room from its costly device recall. Speaking to Bloomberg earlier, CEO Roy Jakobs says the company remains optimistic when it comes to operations in China.
It's to be acknowledged that the current state of the economy is under pressure in China. And that's also something that we see coming back through in our results. We started the year very strong in China. We saw a bit of slowing now into the second half. But actually, if we look towards the demand for healthcare solutions, but also the consumer strength and the demand for strong brands and innovation, actually, we have no doubt that we will be continuing our growth trajectory in China.
Roy Jakobs there, the Philips CEO, speaking to Bloomberg's Kriti Gupta. Now, in other earnings news, Europe's biggest car maker has trimmed its profitability forecast for the year after earlier hedging losses were compounded by higher costs and supply chain issues last quarter. In its prelim results, VW now sees operating profit level with last year. Joining us for what to expect from the German automaker's full results this week and other earnings is Bloomberg breaking news editor Leonard Kane-Scherper. So, Leo, we have these VW operating profits, the prelim numbers at least way below estimates. What was behind the miss, and what does that mean for their full set of results?
Yeah, exactly. It was one of those classic German ad hoc prelim profit warnings late on Friday afternoon. Basically, the key reasons were higher overhead costs at the VW brand. I know Volkswagen is trying to come up with an efficiency plan there, and it was also due to mainly a supply chain hiccup, I guess you could say, because one of the EV production suppliers in Slovenia was hit by flooding last month, and that was another factor here. And then looking ahead to Mercedes on Thursday. They will probably be scanned for any update on how demand is holding up in China.
We're also going to have some of Europe's biggest banks reporting: Deutsche Bank, Santander, Barclays. I mean, a lot. What are some of the key thematic things to be looking for?
Yes, exactly. So it's a pretty simple story when it comes to banks this earnings season. Basically, all those bumper profits that we've seen throughout the last quarters, they likely have peaked this year. And now investors' attention really turns to how geopolitical risks may affect credit quality and also profit margins.
And Barclays specifically, because that's going to be the first one we get. That'll be tomorrow. What's the focus?
So I think definitely the strategy review. They kicked off the strategy review earlier this year to eventually, lift that valuation, to unlock value, as they would say, because Barclays is still trading at a pretty steep discount to US rivals. And investors will be very keen on getting an update on that front.
Okay, Leo, thank you very much for all of that. That is Bloomberg's Leonard Kane-Scherper. Now, elsewhere, Chinese authorities are again shaking the confidence of foreign companies in the country. A series of arrests, as well as an investigation into Foxconn, which is Apple's most important partner and one of the largest employers in China. Let's get more on this from Bloomberg's Peter Elstrom in Tokyo. Hi, Peter. Okay, what are the latest on these probes, and what is the significance of them?
And so this comes after a series of investigations and arrests that have sort of unsettled foreign companies doing business within China. We had the investigations into consulting firms earlier this year, including Bain. We had the arrest of a pharmaceutical executive, too. And now we've got this investigation into Foxconn. Foxconn is not just another company doing business in China. It is the most important partner for Apple. It makes the vast majority of the iPhones that are sold out into the world. And it's an enormous employer within China, too. It employs more than 1 million people in different factories around the country. So this is a very serious investigation. Authorities say that they're looking at tax issues with the company and also land use within the company. It's not clear exactly at this point where this investigation is going, but the early signs of it kind of rattled investors. We saw Hanhai shares down in Taiwan, and then also another unit of Foxconn called Foxconn Industrial Internet fell its limit today while it was trading in China. So investors are taking this pretty seriously.
Are they taking it seriously just when it comes to implications of Hanhai and Foxconn, or is this more a concern in general for foreign companies who operate in the country?
Well, foreign companies, foreign executives certainly have been a bit on edge with some of these investigations and the arrests that we've seen. It does carry particular resonance for Apple. This is such an important business for Apple in particular. Apple's been under a fair bit of pressure within China recently. It gets about 20% of its revenue from China, so it's an important market for selling iPhones. Also, it's a very important production base. What we've seen is that Huawei Technologies, one of its longtime challengers, had been effectively knocked out of the smartphone market earlier. It was blacklisted by the U.S. It wasn't able to get the components that it needed really to be able to sell smartphones in China and beyond China. This year we saw that Huawei was able to get domestic supplies of these chips, so it's essentially getting back into the smartphone market, and there's a lot of nationalistic support for Huawei at this point, thinking that consumers should be buying Huawei phones because they're supporting China's technology efforts instead of, say, Apple phones.
That is an interesting point, Peter, the geopolitics that comes into this. I mean, is there any element to which the U.S. might look at Hanhai actions, Foxconn actions, and say, okay, maybe this is part of the tit for tat. This is a threat to Apple and American companies in China?
Yeah, we've seen some of those actions. We have reported that there's a broadening ban against Apple's iPhones within government agencies and also some state-owned enterprises. There's also a very interesting dynamic with Taiwan in the Taiwanese presidential election that's coming up. The founder of Foxconn, Terry Guo, is running for president. He is not a leading contender. He's one of the long shots for the presidency. But one of the key issues in that election is going to be support for China. And some people have interpreted this as a move by Beijing to try to gain some influence in that election and sort of signal that Beijing does have some influence over the economic performance of these Taiwanese companies. And when it comes to Taiwanese companies, there are very few that are more important than Foxconn for the economy within Taiwan and beyond Taiwan.
Peter, thank you very much. That is Bloomberg's Peter Elstrom in Tokyo after Hanhai traded lower by about 2.9%. More to come on today's biggest stories. This is Bloomberg.
You have a supply-demand imbalance, and that's something that makes markets move. I think it is something that has to be watched very closely, and I think the Fed has an obligation to be ready to assure the liquidity and the functioning of the Treasury market. But as is always true, David, there's a difference between a volatile market in response to new information, when there's a lot of new information coming, and some of it may not be good. That's one thing. It's a quite different thing when you have a non-volatile, when you have an illiquid and not functioning market. I haven't seen evidence yet that that's where the Treasury market is, but certainly that's something that the Fed and particularly its outpost in New York, needs to be watching closely.
Former U.S. Treasury Secretary Larry Summers speaking with David West, and maybe reflecting some of what Jay Powell said, talking about the long end moving higher on supply. All right, it's time for the Bloomberg Big Take now, one of the most well-read stories on the terminal. And across the $100 trillion asset management industry, money managers are facing a dire situation. The unprecedented run of the bull market that's buoyed their investments has come to an end. Joining me now is Bloomberg's asset management reporter, Lacqua Giftapolou. Lacqua, a really fantastic story. And I love this because it is a trend, right? We've long talked about ETFs, the passive funds, the cheap things, really challenging active asset managers. Why is the challenge greater now than it has been before?
Well, Danny, as you said, the challenges have been around for at least a decade. The investors have been largely ditching active mutual funds to go to cheaper passive products, and asset managers, active ones, have been trying to deal with it. But what helped these years were the bull markets that were buoying their investments and as a result keeping their revenues high. Now we're entering a new world where interest rates are high, there's no more easy money, and geopolitical tensions seem to be here to stay. So these guys have a bit of an issue because there's nothing to buoy their investments if markets stop rising, and there's no new cash going into their funds to offset the very heavy outflows that we're seeing across the industry.
It's interesting. I was just at a JPMorgan briefing for their long-term capital outlook, and they said, look, markets are about to get more difficult. The bull market is over. Therefore, you need active managers. You need hedge funds, kind of pitching for the opposite, saying that because markets are getting worse, that's when we can outperform. Are many managers relying on that, or is there anything more actively they can do to reverse it?
To be fair, this has been the narrative for quite a few years, that people will come back to us and they will need us when markets are more challenging. But if you look at the data, the passive products have been gaining more and more market share, depending on whether markets go up or down. And they are about half of the money managed across active and passive funds in the US right now. 10 years ago, they were 27%. So it seems that people prefer to pay less money than trust the active managers. That, of course, I'm here to be proven wrong, but that has been the narrative for quite a few years, and the trend has not reversed. So while it sounds like, it should or could be the case, the numbers are not necessarily supporting it so far.
And Lacqua, I love how you describe this in this story. It's a slow decline into a cliff edge moment. What tips these firms over the cliff edge?
Well, I think there is a general consensus across the industry that an extended bull market will tip many of these companies over the edge, because when your margins are already squeezed, M&A hasn't really worked. New strategies to give you an edge have made you all look more like each other than less. And then you have markets stopping to help your revenue and no new money going in. You can see how many of these guys that don't manage to differentiate or transform themselves might just gradually stop existing.
Right. Lacqua, thank you so much. That is Lacqua Giftapolou with the Bloomberg Big Take. You can, of course, read it by going NI Big Take on your terminal. A quick check on treasuries as we head to the end of the hour. We are looking at yields moving higher. A carbon copy of what happened last Monday when we got the reversal of a haven bid into treasuries. We are looking at a 5/30s curve, which is at the moment positive, trying to close into positive territory for the first time since August 2022. Apple also softer in the pre-market trade, down by 0.7%. China reportedly has started into a probe of Hanhai. That's, of course, of the parent company Foxconn. Up next, I'm sticking around. It's Bloomberg Brief with me and Manis Cranny.